Welcome back. It's been another crazy week with Trump as president, and it seems like he's doing interviews almost every single day that causes the market to swing mostly down. On Monday, Trump confirmed that the Mexico and Canada tariffs will go through, and he also announced another 10% tariff on China. So, we'll talk about what this means for my companies, specifically ELF, which I bought more of this week. Then we got news that China and Canada launched retaliatory tariffs just a few days later, followed up with news that Trump is actually delaying some of those tariffs on both Mexico and Canada. Then on Friday, we got the jobs report, which is important to pay attention to see what unemployment numbers look like. We don't want unemployment numbers too high because then we could start seeing a slowdown in the economy or even a recession. After all those news, we'll try to piece together what this means for our stocks, and we'll hear what everyone's favorite bull, Tom Lee, has to say about the near future. Lastly, as always, I'll share what I bought this week. As you may know, I deposit $500 into my account every single week and I buy stocks to avoid timing the market. However, on special occasions like this week, when my portfolio was down almost 6% at one point, I made an extra $5,000 deposit and I'll tell you which stocks I bought with that money. So let's not waste any more time and let's jump into the news. First up, to start the week off strong, we got the news that Trump vows March 4th, which was Tuesday, tariffs for Mexico, Canada, and an extra 10% for China over fentanyl. The report says 25% tariffs on Mexican and Canadian goods will take effect on Tuesday, along with an extra 10% duty on Chinese imports because deadly drugs are still pouring into the US from those countries. And if you didn't already know, the inflow of drugs was the reason, or at least the way he was able to get these tariffs in place so quickly. Basically, he declared a state of emergency because of the inflow of drugs, and that's how he was able to bypass Congress and the House. And that's what we continue to see with the reasoning here. Here it says that Trump told reporters in the Oval Office he decided to add the extra tariffs on China and stick to the Tuesday deadline for Canada and Mexico, given what his administration sees as insufficient progress in curbing fentanyl flows into the country. So clearly, not enough progress was made for his liking. However, some progress was made. The report continues to say here that the Customs and Border Patrol agents seized 991 pounds of fentanyl at the southwest border in January 2025, down 50.5% from a year earlier, but still enough to kill millions of Americans, the White House official said. So, to these news, China and Canada immediately retaliate against Trump's tariffs. Specifically, China retaliated on Tuesday by announcing 15% tariffs on chicken, wheat, corn, and cotton imports from the US, according to a statement from the State Council Tariff Commission. Additionally, a 10% tariff on sorghums, soybeans, pork, beef, aquatic products, fruits, vegetables, and dairy products was also imposed, it said. Separately, China's Ministry of Commerce said it added 15 American companies, including drone maker Skydio, to its export control list, which would bar Chinese companies from exporting dual-use equipment to them. China's retaliatory tariffs followed a, quote, restrained, targeted approach aimed at causing pain to those industries that matter the most to the supporters of the Trump administration. He noted China's tariffs give it room for negotiations to potentially avoid even more damaging tariffs down the road. Speaking at a regular briefing on Tuesday, Lin Jian, a spokesperson for China's foreign ministry, said, quote, China will fight till the end. If the U.S., quote, insist on waging a tariff war, trade war, or any other kind of war. He goes on to say that, quote, I want to reiterate that the Chinese people have never feared evil or ghosts, nor have we ever bowed to hegemony or bullying. Pressure, coercion, and threats are not the right ways to engage with China. Trying to exert maximum pressure on China is a miscalculation and a mistake. So honestly, it seems like we have a trade war on our hands. China launched these retaliatory tariffs and they don't seem to be backing down. Moving on to Canada. Canadian Prime Minister Justin Trudeau warned Tuesday in a press conference that Canada, quote, will not back down from a fight. He said he would implement a 25% tariff on 30 billion Canadian dollars of US goods immediately, followed by an additional 125 billion Canadian dollars in 21 days' time. Quote, this is a very dumb thing to do, he said. In remarks he said were directed at Trump. We two friends fighting is exactly what our opponents around the world want to see. Dairy products, meats, grains, wine, beer, apparel, footwear, motorcycles, cosmetics, and certain pulp and paper products are just some of the US goods that will be subject to immediate tariffs according to Canada's Department of Finance. We will also be challenging these illegal actions by filing dispute resolution claims at the World Trade Organization and through the USMCA, Trudeau noted. In the meantime, our tariffs will remain in place until the US tariffs are withdrawn and not a moment sooner. If tariffs don't cease, Trudeau said his government is in active conversations with provinces and territories to pursue several non tariff measures, measures that will demonstrate that there are no winners in a trade war. So, after all that news came out on Tuesday, on Thursday, we got news that Trump delays some tariffs on Mexico and Canada for 1 month. Specifically, the article says President Donald Trump on Thursday signed executive actions that delay for nearly 1 month tariffs on all products from Mexico and Canada that are covered by the USMCA Free Trade Treaty, a significant walkback of the administration's signature economic plan that has rattled markets, businesses, and consumers. The executive actions follow a discussion Trump held Thursday with Mexican President and negotiations between Canadian and Trump administration officials. Quote, after speaking with President Claudia of Mexico, I have agreed that Mexico will not be required to pay tariffs on anything that falls under the USMCA agreement, Trump wrote on Truth Social on Thursday. He said the tariffs would be delayed until April 2nd. The USMCA is the United States Mexico Canada agreement, negotiated by Trump during his first term, that makes the three North American countries a free trade zone. He goes on to say that, quote, I did this as an accommodation and out of respect for President Sheinbaum. Our relationship has been a very good one, and we are working hard together on the border, both in terms of stopping illegal aliens from entering the United States and likewise stopping fentanyl. So take that how you want, but I think we still have to ask ourselves the question, is Trump still just using these as business tactics to uh, kind of force these countries to work on some of the problems he's trying to correct? What I mean by that is he simply trying to get more urgency from these countries around immigration and the inflow of fentanyl by, following through with these actions? Let me know how you interpret all this in the comments below. Okay, moving on to the news that we received yesterday or Friday, the jobs report. We're not going to get too deep into this here, but it says that the US unemployment rate came in at 4.1% for the month, according to the Bureau of Labor Statistics, having previously dropped to 4% from 4.1% between December and January. So it's pretty much flat. Obviously, we want to see what kind of impact Doge has on unemployment numbers, but as this Steve guy here pointed out, he said the bulk of government job cuts are likely too recent to show up in Friday's jobs report. Workers won't be counted as unemployed until their severance runs out. So we might start to see that in the next month or the month after that. Obviously, the impact of Doge has been a big worry over the past couple weeks, but at least for myself, that worry kind of settled when I saw this come out. It says Donald Trump restrains Doge as concern mounts over scale of job losses. It says here that Donald Trump has moved to constrain Elon Musk's cost cutting task force, ordering his cabinet to ensure the most productive civil servants are exempted from sweeping layoffs. So how I take this is he's just making sure that the impact isn't too big, the unemployment rate doesn't get too high, so the economy doesn't slow. Now, Trump has also come out and said that he's not even looking at the stock market. And I think that is true in the short term while he gets his policies in place. But we do know that he bases his success on the stock market, as he said in the past. So, over the next 4 years or the long term, I expect that he's aiming for very good stock market returns. There's just a little bit of volatility in the short term that will be forgotten when the next presidential elections come around. As I said, again, from his previous presidency, we know that he uses the stock market's performance as a measure of his success as a president. But as this article here highlights, Trump bases his success on the stock market. He's been awfully quiet about it lately. However, the article goes on to say that more than a dozen people close to the president told the New York Times that he, quote, sees the market as a barometer of his success and abhors to the idea that his action might drive down stock prices. So, as I said, I do think it's true that in the short term, he's not looking at the market. However, based on this, it does seem like, he at least acknowledges or maybe even dislikes the fact that some of his actions could drive down stock prices. Therefore, I currently see this as a short term issue, and as of right now, I'm not too worried about the long term. Okay, now let's move on to trying to piece all this news together and trying to figure out what it means for our stocks and portfolios. But before we do that, we're going to get Tom Lee's short-term outlook.
Parker. He's the founder and CEO of Triariate Research. Tom Lee is the managing partner and head of research for Fundstrat. Both are CNBC contributors. We're lucky to have you both together today. Welcome, guys. All right, Adam, just give me your assessment as you watch what is a increasingly headline-driven market.
Yeah, I mean, look, as you know, we think it's going to be choppy. I'm still optimistic that on the other side of this, we could get back toward, revenue growth and beneficiaries on the AI front with productivity and margin. So the call we've had is choppy here in the first few months. Then once the management teams understand what the policy backdrop is, they can, deploy productively capital. So I choppy first half, and then we probably get a resumption of pretty good growth.
Tom, you've tried to remain pretty optimistic through all of this. Are you still?
Yeah, I am optimistic. I can understand why investors are sitting on their hands. They don't really know how severe these tariffs are going to be, how long they are, but now we're seeing a big price correction, a decline in sentiment, and then something like today, we got a bad ADP jobs report, and the market's actually up, so we're actually rising on bad news, which is a good sign that a lot of bad news is priced in.
But do you agree with Adam that the first half of the year is likely to be a little more choppy and that you can get through some of these issues here regarding trade, and then you look down the road to tax policy and think that, okay, well, that's going to usher in a better back half of the year?
In fact, what's just happened in the last
tax policy, excuse me.
Yeah, what happened in the last 6 weeks is essentially a bear market that has swept through sentiment and positioning, right? Because if you look at hedge fund positioning, it's gone almost neutral, and a huge correction in momentum. So I think it's very possible that March, April, May could actually be like one of these huge rally months where we're rallying 10, 15%.
Even in March. As we're sitting here, we're going to be driven, obviously, by more tariff headlines. We do have to consider the fact that earnings could take a hit. Do we need to reassess that?
Look, I think if stagflation were a stock, it's up off the low. That's why the market has been choppy. People are worried about, a slowing economy, Walmart, consumer confidence, retail sales looking a little light. At the same time, they're worried about, higher prices. I don't think that's ultimately what's going to happen.
So you'd be short that stock?
I would be. I just don't know. Maybe I think Tom is short it today, and I maybe would say it's I maybe would be short it in a couple months, but I think we're in the same mindset that we'll get on the other side of this at some point, probably in the second quarter. I just think it's hard to get through it until we really understand. If you're the CEO of a company that's a big company and you've got facilities and customers in Canada and Mexico and China, et cetera, I just think you're a little bit, I like his phrase, sitting on your hands a little till you understand a little bit more about how to most productively deploy capital. I think that usually takes probably through April earnings and guidance, and then I'd probably kind of be more optimistic that we have a certain path. So we're in the close enough for, government work, if that's a thing.
Well, you might be losing.
Yeah, exactly. We might get Doge.
I don't know if that's so bullish for you.
I'll take you too.
It's one thing for CEOs to be a little skittish, be a little more cautious. That's what they get paid to do. Investors often have to place their bets before something takes place. Is this a buy, this unsettled market that we've witnessed recently?
Yes, in my mind, we put out a piece yesterday just talking about the 10 best days that happen every year. Last year, for instance, the 10 best days added up to 21 percentage points of the S&P. X those 10 days, the market was only up 4%. So, you don't get 20% years because it's good through the year. It's just the 10 best days. I think the setup for a 10 best day is near, because if the economy's near stall speed, I think people realize the Trump put does come back, because otherwise, it has to unwind all this austerity. And if the job market's soft, the Fed put comes back into play, because the Fed doesn't want to play with stall speed. And I think that's what is going to be the positive catalyst in the next couple of weeks. And on top of that, we already know stocks will bottom before bad news peaks. And so if we're seeing the market not fade on bad news, that means we're already priced in a lot of things that would scare us.
So those two guys clearly think that there's light at the end of the tunnel. And as Adam Parker mentioned at the start there, he mentioned earnings. The past earnings season we just went through, earnings were good. future guidance it wasn't great, but it wasn't bad. It was just decent. So we're seeing a lot of these big tech companies, the high weights in the S&P 500, they're at reasonable valuations right now with decent guidance. So it might be hard to get those big weights to drop that much more in price at this point. And you really need that to happen if you're going to see a larger correction in the S&P 500. And with these tariffs, I'm not willing to make any sort of bets or make any moves based on something that might be gone on Monday. As we've seen, these tariff news are all over the place and no one knows what's going to happen. And because no one knows what's going to happen, I think it can be a good idea to just step back and make it really simple. As Warren Buffett says, be fearful when others are greedy and greedy when others are fearful. And if we look at the AAII Investor Sentiment Survey here, and the AAII Sentiment Survey offers insight into the opinions of individual investors by asking them their thoughts on where the market is heading in the next 6 months and has been doing so since 1987. Investor sentiment is measured with a weekly survey conducted from Thursday until Wednesday or whatever. And if we look at this, you can see that currently this week, the market is overwhelmingly bearish. And just last week, you can see that we reached the 1-year bearish high. And after looking at the actual historic data, we haven't been this bearish since the 22 crash. So to simplify it for myself, since we know that economists and the professionals are often not accurate in their calls, I'm just buying when everyone else is fearful. So that's what I did this week. I bought, and more than I typically would. As I mentioned at the start, I deposited an additional $5,000 to buy this dip. I deployed that here, most of it on Tuesday, where my portfolio was down almost 6%. If we look at my history here, we'll see that March 4th, 9 shares of AMD, 14 shares of ELF, another 10 shares of AMD. I bought a little bit of cheesecake just to round my shares to an even number, so don't mind that. Then I bought 10 more shares of AMD, loading up heavily on AMD still. Then scrolling up a little bit, 10 more shares of AMD, 10 more shares of ELF, and 5 more shares of Cake. AMD and ELF have been hit the most recently, so I continue to buy those. And I made a video earlier this week about the 3 stocks that I'm buying in March 2025. I go in depth into AMD and ELF and why I'm buying them and how I see these tariff news impacting both companies that sell to China, for example. So if you want to learn more about those companies, go watch that video. So as always, this isn't financial advice or investment advice. This is just what I'm personally doing, making that decision based on the factors that we do know. And those factors are overall that I think Trump doesn't want too much pain in the short term, even though he's willing to endure a little bit of pain to get his way. And the fact that valuations are reasonable relative to future projected earnings. And keep in mind, in my opinion, there are still very overvalued companies out there, so you really have to look for your deals. And with the companies that I'm buying right now, they're the most attractive opportunities. So I'm personally taking this dip as an absolute gift and just buying the dip, but let me know what you're doing in the comments below. That'll be it for this video. See you in the next one.